2020, it was a wild year for investors. The U.S. was flying high before the pandemic sent the markets crashing, only to see them bounce back to all-time highs to close out the year. Mike Reeves of Strategic Wealth Designers joining us now to give investors some insight in what the outlook for investment portfolios would be like in 2021. Good morning, Mike.
Good morning to you. How are you doing?
I'm doing well. People want to know about how their 401ks, maybe their investments might do. I know it's kind of a broad question, Mike, but what expectations do you have for the new year?
Well, I think you're going to see 2021. That's a year of transition. 2020, obviously, incredibly difficult. But coming up, I would look for more vaccines early this year. I would look, for a continued economic recovery. However, we truly don't know yet because of all the stimulus kind of covers it up. What kind of scarring has happened on the economy, businesses failing job losses. So the second half, obviously optimistic that things get better in everyday life. But how much of the good news has been priced into the stock market? We'll just have to wait and see.
Yeah, and speaking of just the economy, when do you think things will return to normal? It seems on a daily basis things go up and down with every single announcement.
Yeah, I think some health experts, what I'm seeing and reading, they're saying it might take a while as far as getting back to everyday life, caution on handshakes, hugs, kisses, large gatherings. All those concerns are out there, and you might have to actually have a vaccination card to get on a boat like a cruise or a plane. So, to us, you want to use a blended approach. Be careful with just stocks and bonds. You want to use some other asset classes or other tools to help reduce risk, because it could be a bumpy ride here if things don't go perfectly.
What about some stocks and equities that are still suppressed? I know you talked about a bounce and a lot of things have gone back, the Dow overall, but are there still some equities and stocks that have room to run?
Well, first, you want to keep in mind there are some warning signs out there about valuations. IPOs, believe it or not, this year, that was the highest activity in IPOs, which typically happen, those initial public offerings typically happen during a good time. So that's as high as it's ever been since the dot-com era. And when I first got in the business in 1994, what you saw would be interest rates rising and bonds losing money. I think a lot of people think that bonds are safe. They're safer than stocks. They're not completely safe. So that being said, and you always want to consult an advisor, there's some interesting things that are still that you might want to consider, which would be companies that can get goods faster to the consumer. Building warehouses, drone technology looks interesting there. How about the trend to 5G? Everybody likes their phone to work faster, right? And you're seeing that transition now. And then lastly, if rates do rise this year and bonds do get hurt, some companies actually, or some areas, do better. Financial stocks, they like higher interest rates. They don't appreciate rates being this low. It really hurts their ability to make money. So those are some areas that you could consider.
A lot to consider, so talk to your financial advisor. Mike Reeves of Strategic Wealth Designers. Mike, as usual, thanks for being here this morning.
Thanks for letting me on.
Not a problem. We don't let you on, Mike. We want you on. There's a big difference between that. Mike, again,
I appreciate that.
Okay, just over to you.